The decision to buy a home or to rent one is a pivotal point in everyone's life. It's a choice that has far-reaching implications for your finances, lifestyle, and overall well-being. While there is no one-size-fits-all answer to this dilemma, it's essential to evaluate your unique circumstances before making a decision. So today I'll take you to 8 renting hints you should look out for before you buy a home. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Number 1. The housing market. The state of the housing market is a critical factor that should influence your decision to buy or rent. Real estate markets are dynamic and can experience fluctuations in prices due to various economic factors. When considering purchasing a home, it's essential to assess whether the market conditions are favorable. Buying a home when real estate prices are surging due to a robust economy can potentially result in a wise investment. However, if prices are at their peak, it might not be the ideal time to enter the market. Overpriced properties can lead to suboptimal returns on investment, making renting a more sensible choice. Market cycles are inevitable, and they tend to shift over time. When the market is experiencing a shortage in inventory, prices may rise, creating an environment where buyers feel compelled to make quick decisions. However, it's crucial to resist the pressure to rush into a purchase. Patience and careful consideration are vital when selecting a property that aligns with your needs and financial goals. Number 2. Credit score considerations. Your credit score actually plays a pivotal role in your ability to secure a mortgage with favorable terms. Most private lenders require a minimum credit score of 620 to qualify for a mortgage. Additionally, having a higher credit score can improve your chances of securing a lower interest rate, making homeownership more affordable. Conventional mortgages typically demand a down payment of at least 5% of the purchase price, with an additional requirement for private mortgage insurance if your down payment is below 20%. While government agencies can provide options for those with lower credit scores and limited cash for a down payment, these alternatives often come with trade-offs, such as higher interest rates. To position yourself for homeownership success, it's advisable to address any credit issues well in advance. Taking proactive steps to improve your credit score can lead to better financing opportunities and increase affordability when applying for a mortgage. Number 3. Managing debt and mortgage readiness. Another significant consideration when contemplating the decision to buy a home versus renting is your financial health. If you find yourself grappling with substantial debt, it might not be the right time for you to take on a massive mortgage. Managing existing debt completely is a crucial prerequisite for handling mortgage debt responsibly. If you're struggling to manage your current debts efficiently, it's a clear indication that you may not be prepared to shoulder the financial burden of a mortgage. Moreover, if your monthly bills already consume a significant portion of your earnings, adding a mortgage payment to the mix can be financially unsustainable. In such cases, it's advisable to prioritize getting your existing debts under control before considering homeownership. Lenders assess your debt-to-income ratio, which is the percentage obtained by dividing your monthly debt payments by your monthly gross income. To determine your ability to repay a loan or your reliability as a borrower, typically, lenders look for a debt ratio around 43% or lower. If your current debt payments already consume a significant portion of your income, it's likely that adding a mortgage payment would push your debt ratio above the acceptable threshold. In such scenarios, it's prudent to focus on paying off more debt before venturing into homeownership. Number 4. Future relocation consideration. Another critical factor to contemplate when deciding between buying a home and renting is your potential for future relocation. If your current job situation is temporary or you foresee the need to relocate for work in the near future, investing in real estate may not be the most practical choice. Renting offers a distinct advantage in terms of flexibility. With a rental property, you can secure a lease for as short as 6 months or a year, providing the freedom to adapt to changing circumstances quickly. On the other hand, homeownership represents a more extended commitment, which can complicate the process of relocating. When considering a move for work, it's vital to assess your job stability and satisfaction in your new location before even considering purchasing a home. Buying a house involves closing costs, and it typically takes several years of ownership to recoup these expenses. If you're forced to sell your home shortly after purchasing it, it could incur a financial loss. To avoid such situations, it's advisable to refrain from rushing into homeownership, allowing yourself time to adjust to your new environment and evaluate your long-term job prospects. By doing so, you can make a more informed decision about whether buying a home aligns with your current and future needs. By the way, if you're enjoying this video, please take a moment to like and subscribe. It really helps us spread the Thrive Wise love so we can help more people thrive wisely. And going back, number 5, insufficient down payment. Buying a home often requires a significant upfront investment. Before embarking on your home buying journey, it's crucial to ensure you have enough savings to cover a substantial down payment. Experts typically recommend aiming for at least a 20% down payment to avoid the additional expense of private mortgage insurance, or PMI. Building a healthy cash reserve to cover unexpected expenses during the home buying process is equally important. Engaging in a qualified real estate agent or lender can provide valuable insights into your affordability and down payment requirements. If your savings fall short of these goals, it may be prudent to delay buying a home until you have a more secure financial foundation or consider renting as a more viable short-term option. Number 6, commute considerations. Yet another crucial factor often overlooked when deciding to buy a house is the commute. Your dream home may be within your budget, but if it's situated far from your workplace, renting might be a wiser choice. Commuting, particularly in areas where cars are a necessity, can entail hidden costs and adverse health effects. Long commutes have been linked to stress, physical health problems, and strained relationships. Moreover, the financial aspects of commuting can be substantial. Fuel maintenance, increased insurance costs, and the need for a new vehicle sooner than anticipated can strain your budget. It's essential to weigh these factors carefully when considering a home purchase and whether the longer commute is worth the additional expenses and potential health risk. Number 7, short-term residence. One of the foremost factors to consider when deciding between renting and buying is the length of your intended stay. Purchasing a home is a long-term commitment, typically requiring at least 5 years to recoup the initial investment and build equity. If you anticipate relocating within a shorter time frame, perhaps due to work opportunities or personal preferences, renting may be a more suitable option. The financial implications of selling a house sooner than later can be substantial. Realtor commissions, transfer and capital gains taxes, moving expenses, and the costs associated with preparing the house for sale can significantly erode any potential profits. Therefore, it's vital to align your housing decision with your anticipated duration of stay, keeping in mind that renting offers the flexibility to adapt to changing circumstances. And finally, we have number 8, homeownership responsibilities and maintenance costs. While owning a home comes with its many advantages, such as the freedom to decorate and renovate to your heart's content, it also entails a set of responsibilities that may not be immediately apparent. One of these responsibilities includes home maintenance tasks like mowing the lawn, cleaning the gutters, and trimming hedges. Unlike renting, where you can simply contact the landlord to address maintenance issues, homeowners are responsible for the upkeep of their property. Before taking the plunge into homeownership, it's essential to assess whether you are prepared for these responsibilities. If the idea of regular maintenance tasks seems daunting, it might be wiser to continue renting. Home maintenance can be expensive, often ranging from 5 to 10% of the home's value annually, depending on the age and condition of the property. Additionally, if your prospective home belongs to a homeowners association, which is common in condos, gated communities, and some apartment residences, you'll need to budget for monthly HOA fees. which can range from $300 to $400 or more in some markets. In conclusion, the choice between buying a home and renting is deeply personal and should align with your unique circumstances and lifestyle. All of the things mentioned are all essential factors to evaluate when making this pivotal decision. Remember that there is no one-size-fits-all answer, and what may be the right choice for one person may not apply to another. Therefore, take the time to thoroughly assess your situation and make a well-informed decision that best suits your current and future needs. Well, that's basically 8 renting hints that you should look out for before buying a home. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.